Hello everyone, welcome back to another video. In today's video, we'll continue with the last part that we had on scalping. So we'll just discuss some more concepts in the sense that today we have a day that is different to the one that we discussed in the last video. If for people who are watching this for the first time, you can go ahead and watch the video that we had on the previous time in the previous week. So what we had on that day was a trend day, and today we have a day that is something that looks something like this. We will just discuss this as well for people who are new to volume profile and even footprints. So as usual, if before we enter into the footprint charts and discuss some of the trading ideas that we can get out of the market that is taking place today, we'll just have a look at what has been happening previously in the overnight session and the day before that, or the real trading hours yesterday. So why is that important? It's because you need to know when you're entering into a day, what type of day are you going to expect. For example, if in the last video, like we had a trend day, if you try and fade markets like that, you would generally not be that successful. So what I mean by that, for example, let's consider this day. Okay, so there's no sense. Of course there are always good opportunities, for example, if you fade these moves, but you don't know on a trend day when these moves are going to happen. So what we do is, it is the lack of information on the upside that is actually that doesn't favor the odds in our favor. So what we do is we find these low volume nodes from where the markets has taken off and use them to take trades off. Okay, of course we can use the footprint, but our strategy becomes really more effective if we have predefined points where we want to enter. What that does is, it gives us a framework of some sort that okay, I will enter on a trend day towards the upside. I will try and take only the long sides. The other thing that it does is, for example, like we generally do, we try and trail our stop losses. So we will get good risk to reward trades only in the upward direction, and we won't get as much on the downward direction. So for example, let's consider, let's say if you did get, if you're looking at the footprint and the ideas that we discussed yesterday, you could, I mean, let's assume that you caught the move over here. Your stop loss would have, of course, been somewhere here. This is a decent move. Not that I'm saying it's not a decent move, but let's consider another scenario. If you caught the move on the other side, so you were expecting, you saw this pullback and you were expecting this to hold this area, and you took a long over here. So of course you get your 1:2 quite early, and more if you are a little more patient. And so the idea is that you get to see more in the direction of the trend on a day like this. And how do you know it is a trend day? Again, it's not that, I mean, difficult in the sense, when you see something like this. Okay, so I've been discussing this in a lot of videos when I do volume profile. This is a profile which has, again, you can call it a balanced, or I call it multiple distributions. And when a market isn't able to even breach the first distribution, that is over here, okay, it's not a I mean, textbook multiple distribution, but let's consider, because the range wasn't that high. And this of course is the overnight session. So even when we consider the overnight session, this is the POC. It isn't able to even breach the POC, and it isn't able to break the first distribution that we're seeing here, and it just takes off at some point in time. This is a very clear indication that the market is really bullish at this time, and it keeps going up, of course. Now, if you remember in the last video, I also discussed there are times when the market will, let's assume it goes here, and this was a trend day. Let's assume it didn't happen like this. You could have had a P-shaped profile, let's say over here. So what will happen in a scenario like that is, you will have a lot of buyers getting trapped like this, and sellers on the downside, what we are seeing in this market right now. Okay, so we'll come to this in some time, but what I'm trying to get at is, you will start seeing this even on the profile, volume profile. So that is your first indication that now maybe you can start looking at the fade trades. But even on days like that, I prefer to wait and take trades in the other direction. Of course, you'll not be lucky, or I mean, we'll be unlucky sometimes when this breaks down and it goes to the other side, or it breaks this, let's assume this distribution, and goes to the downside. But again, we'll play as the market plays, and we'll play according to the risk reward. Now let's consider the present day. So when we come into this day, of course the same thing happened. like it has happened on the previous day. So you see these distributions that I can clearly see. You can mark these distributions and start your day like that. So your first step towards taking a shot is that this is the area that I need breached, or let's say this POC that is coming on from it. So this zone needs to be breached for me to start thinking of maybe a pullback or a liquidation break of anything of that sorts on the short side, because the tone is so bullish. If you look at the scenario that has been happening, so when I'm entering the trade, I've seen this overnight session, and I've seen the overnight session completely play out above this zone. So this is my 1930 is my zone below which I like we just discussed, I think of a short trade. Now when the market opens, you see what happens. It tests the upper bound range of this overnight session, goes down, and this is where I get my clue. It goes down, doesn't break. This is exactly the POC of the previous day, not the overnight session, but the previous day that we just saw. It takes a bounce from this, and a good one, in the sense it goes one way in this direction. Similarly, it had gone one way in the other direction. So when you see something like that, within the first hour, you will get to know that the market today is most likely going to be within this range. Now, it's not always the case, but what is likely going to happen is it might extend a little bit here, it might extend a little bit here. Is that what we're expecting? Sometimes what will happen is, let's assume there is a liquidation break of some sort, or generally when a market is this bullish, what will happen is it will do like this, and in the last hour or hour and a half, it will just go above and close somewhere there. The overnight session, it will start trading in this range again, like it has done in the previous few days. Okay, so this is what we can expect if something like that happens. But for the moment, for the next hour and a half or 2 hours, if you're coming into the market now, what we're expecting right now is a movement within this range. So that is important. Now let's come to the footprint. So let's get back to the strategy that we're going to deploy in markets like these, where we know that this is going to happen. So the first thing you have to do is, I don't know where the market is going to go down, so I need a sort of a confirmation when to fade. So on days like this, the fade or the trade to fade is when I see a lot of buyers getting trapped. Okay, so how do I do that? Let's take this bar at 1925, for example. Okay, we'll get back to the market or the auction that is going on at present and how to play that, but I just wanted to show you something. Let's go back to 1925. Okay, this is the session. Now look at these numbers. Now these numbers on days like today play an important role. So one number is look at this number, minus 1.1k. So when I am seeing numbers this big and no continuation, for example over here, a lot of a chunk of sellers are here, there is a pullback, and then you see a lot of buyers getting trapped here. So of course the first 5 minutes we just waited out and we see a breakdown, a good one. Okay, and I see a lot of buyers, I'm sorry, sellers here, and a lot of sellers here, and look at the delta over here. So this is a huge value like this one, and look what happens in the next bar. So this is my clue that now in today's session, whenever I see a big number, a big red or a big blue for like this, I will try and plan my shot. Okay, and because I am looking for buyers or sellers getting trapped, because this is what I'm expecting. So of course, even if we don't take this trade, I have now what I do is I generally mark these zones, because I know a lot of buyers are trapped in this zone, and I carried them forward, and all zones like this. So the next time the market comes down, and even this bar, if you see, the numbers are not that high, but a lot of a chunk of sellers, let me show you, are trapped here again. But we don't know when in real time we would have got the time to play this out. But the next time when it comes, if you remember in the last video, we had discussed this trade idea in the live markets as well, that when it came the last time, we planned a trade somewhere here, it failed, and then when it did something like this, exactly at the reason, this is the same scenario that has happened again. We took a trade, and what happens is when this happens and in a bearish tone, even in a market like this pullback is really fast. So you get your 10, 15, 20 points really fast, and look what happens after that. So what you see over here is a sell imbalance. The market goes over there again, traps a set of buyers over here, goes down and does this. So this is very common, one red, one blue, one red, one blue. So this is the market we're expecting. So what you'll have to do on markets or days like this is be quick to enter, and like for example on trend days, we want some sort of a confirmation. On this day, our confirmation is this bar as it is taking place. You can go down to a 1 minute or 3 minute bar, but our confirmation on days like this, you'll have to enter quickly. If you wait for a confirmation, for example, this is the move that is played, it okay, it went here, but if you the stop loss, you can't keep small stop losses if you enter a little bit late over here, because it is a market that we're expecting to be something like this the whole day. So that is the reason, whenever we see something like this, I'm sorry for that. So whenever we see something like this happening, we will try and enter. So let's go to the other side now. This is another region. If we extend this, or I mean contract this, so again, this is the only bar where I have seen the selling come from. Not that I've seen selling come only over here. The interesting part is you see these POCs that are clubbed together. I call them continuous POCs. I've done a video on this as well. So I generally what I find is even on a ranging day, the ones which are tested are very few on these days. If you look at it, there'll be hardly any that are tested, that are naked rather. Okay, so whenever I get this and I find these buyers getting trapped, I would have entered in the first bar itself or over here in the second bar. Of course, it tests again and goes down. Why do I enter immediately at the second bar? Is because I know I wouldn't have time. It will just go down, come up, go down, and keep doing like this. So that is why I enter fast. And the interesting part about this particular strategy is continuous POCs. These naked POCs, you will see very few of them on days like today. Okay, so then next time when you see it is somewhere here, and if you just go by this strategy, you see this playing out. Even if you take a trade somewhere here, it gives you a good 1:2 trade over here. Let's see if we can find another one. So there is another one here that is about 100 or 1997. Okay, so now this is a carry forward, and you can find a trade. Again, you could have taken a trade quite early over here, but the naked POC still remains. So whenever the market moves up over here during the day, if it does, which it probably would, looking at the day that we have here, okay, at least once we're expecting this high volume node, that is this place, 19,197 or 19097 would be tested, and it would give us a good shot is what we're expecting. So when the market does come there, what you're looking for is a bar like this. Okay, exactly like this. In fact, when it will come here, it will probably be in one shot. If it doesn't, then you have to be careful. So the scenario when you see a lot of bars being congested, something like this, and then it comes here, you should not take a shot then. But if you see something drastic, for example, the bar comes here and in 1-2 bars it reaches here, that is a place you enter a shot, and that is the way you enter a shot. Because a lot of consolidation like this, the market breakout will be really fierce. Okay, not that it will continue, but the way to play it out is something like I just discussed. You want to see these sellers, the buyers getting trapped, and take that trade accordingly. So let's see another scenario over here. So again, we've seen one more scenario. We had a naked POC over here. Again, these are continuous POCs that are going on, but we did not get a trade over here. So you can see how quickly it went over there, and you see this zone. We have this zone again over here, and we are seeing a sort of sellers getting trapped in the current scenario, as you can see. Okay, so now if you want to plan a trade, your trade, again, your risk to reward should be very well defined. So the trade should be, let me delete this so that I can get your this thing. So I can see that I have marked this zone. So anywhere near this zone I would try and enter, and I want to see this these sellers accumulate over here. So you can see the sell imbalance come over here. Let's see what happens. So I want the POC to maybe shift a little bit, and you can see these numbers. Okay, so this is what we like, the numbers going high, 729, and so that means a lot of guys are going to get trapped here. Of course, we have sell imbalances above as well. So on a day like this, till now there has been no continuation. So we'll go with what we have seen till now. We haven't seen a break of any bar or a good breakdown whenever we have seen these high numbers. So this is I think the second time only in the day after this, and this the third time I'm sorry, we've seen this number. So you can see how fast it retraced. So this is what I'm trying to tell you. You have to be quick and not wait for too much of a confirmation. If you want to take a trade quickly, you can go down to a 1 minute chart and maybe look over there. Let's wait for it to load. So you can do that. And this was exactly the area where the market took resistance from. So even if it comes back down, you've already got your 1:2 over here, because our stop loss would have been somewhere just below this. Let me get this. So this is a 1 minute bar. We'll go back to a 5 minute time frame. I'm just doing this so that I can show you. So if on days like that, you can shift to a smaller time frame, and you can see the buying step in very clearly over here, the POC shift over here that we were talking about. Now, even if you've not entered here, what you can do is, let's assume if it goes here just too bad, we miss the trade. The other way to do it is, if there is a pullback to this zone again, we will wait and we will try and take a trade. Again, we want to see sellers getting trapped, but it is gone in the upward direction already. So you can understand what I'm trying to tell. So this is the way, this is why I was staying, I was reiterating again and again, you will have to be quick on days like this, because the market would retrace so quickly. So if you look at the end of the day and look at the charts, it will look very easy that, okay, we can trade these days quite simply whenever it comes here, or on a retest. You don't know, maybe if there is a retest of this zone, this naked POC, yes, we can enter the trade. But this was a good trade where we had marked our zones, and you can shift to a smaller time frame to get your entries, I mean, fixated properly. Okay. So similarly, now that you have this zone, you can maybe now look out for a 1948.50 test whenever the market comes next. And if it breaches the upside, we have a place where we can expect the market to take a resistance, that is somewhere here. There is no other naked POC left, and you can see how swiftly it has retraced. Okay, so even if you have entered somewhere here 1943.45 and a stop loss of 5 points, you can see the retracement. It is so quick, and which I was trying to explain when we were starting the session, that you will have to be quick in markets like this. Of course, you can get trapped over here, but when there are moves to the extreme, and when you see numbers like this, so at the moment the number is 512 or 514, but when you are looking at it, that number was somewhere close to 758 or 780 or 800 or so. So that is why I wanted to enter that zone, because that was only the third time in the day that that huge number was coming. And of course, there will be people who say you didn't wait for a confirmation, because I was playing the odds that the market is ranging today, and I have seen those numbers happen only twice in the day. That is why I was interested in going in a long when it came over here. Okay, so hopefully, I mean, you got to learn a new concept today of how to trade days like this that are ranging. And the other important thing is that more often than not, if you trade more, you will end up being just at best break even, or maybe a little profitable. So you have to just wait, take one or two trades and let it be, because days like this will really, it'll be choppy and moving from one direction to other, and you will get these fade moves once or twice. Otherwise, if you try trading in this zone, that is this zone, it is a really choppy zone, and you don't know which direction it can go, or it can just flick like this. For example, if you're planning to take a trade here along over here, you can see how quickly it breaks down and goes up. So it is always better to find these high number bars, something like that happened here, and then take a trade. If you missed it, just too bad. Wait for the opportunity on the upside that we can have over here, 19,000, close to 19,100. If it goes down, the other place like we just discussed is somewhere here, and we want to see a bar form of somewhere here. For example, if it goes here, I want to see it hold this point. If it breaks, let's assume if it breaks this and even this zone 45, then I will wait for a confirmation. So you have to understand that the move that you're looking for has already happened. If it has come again, that means the strength of the buyers, of course, is not that high today, looking at the day that is taking place. But I would like to wait again and look for a better opportunity, because the move that I wanted to play has already occurred. So hopefully this video was of some help to you guys. Until next time, thank you. Bye-bye.